Everyone going mad on this new war news. Everyone waiting what market will do on Monday open. But oil, which we can use as war indicator, because this is a new war and it is directly affecting oil price. One of the biggest bank, JP Morgan, they feels like panic on this war, predicting 120 oil price, speed like it is flying on new war news Monday. It feel like next week before FOMC speech, it will hit 120 at this new vertical speed. They also saying CPI can hit 5%, which can ultimately lead to Fed rate hike. If we see like September 2024 FOMC meeting, their new dot plot, new FOMC speech, and new rate decision. Based on confirmation, it can be rate pause. In September, everything was dovish, and they used CPI and NAP number to justify that rate decision. But now they need something to become hawkish to justify the rate pause, hawkish speech, and higher dot plot. Because you cannot copy paste same SEP since December last year. So if oil fly more, Monday open, stay up till FOMC rate decision, then it will directly affect Fed rate decision. They predicted stagflation last May FOMC meeting. Since then, everything increasing stagflation risk. Like we used to say, history repeat. In 70s, according to AI, group AI, oil shock was major region. Same thing happening now. But nothing new. Technically, we were bullish oil, double bottom, and big vertical breakout. Because tariff end, China factory reopen, manufacturing start, things start flying from China to USA before Christmas holiday. So two things best for oil came at the same time. First war news, then China tariff reduction. Dollar index daily time frame, it made new lower low. For USA, it is sad news. They dumped dollar, they dumped bond, they dumped US stock, and they bought gold. So all US assets were down, gold was up last week. But don't forget June FOMC meeting that will decide closing price of all asset. I think Fed will be hawkish. Their choice, they use dot plot or speech or rate decision. So many tool. Dollar is very weak and it need upside correction. This new lower low can be trap for all the sellers. And this is a big static support zone area plus few retracement plus a trend line. So big hedge fund Paul Tudor John, he's bearish dollar and bullish gold, Bitcoin and stocks. So let's see what happened after June FOMC meeting. Friday was market reaction to war news and very fast gold replacing big reserve currency. They have replaced euro, next one is dollar. And this week is policy timing. If Fed do nothing, then one day they will replace dollar. GDS flying made new high. First time opposite is happening. GDS went up first, now gold is flying. And we are told it is happening because of war news. But it is making higher high with higher low, look like ending down chart pattern. So be careful. This is profit taking area, not a buying place. Silver weekly time frame, possible big parallel channel, upper trend line retest, will be selling opportunity, but price made new range high. Effect turned hawkish starting June FOMC meeting. If they fight aggressively against stagflation, that means recession, because they forecast in May stagflation. Since then, every day risk is increasing So if Fed become more hawkish compared to May about their stagflation forecast, recession risk, this industrial metal can come down. GPUSD weekly time frame testing upper part of trend line, third time, no breakout, no major change. Dollar made new lower low, but compared to that, no major high in GPUSD. So I am expecting hawkish Fed. Let's see how they do it, which can be bullish dollar. Because of that, these pair can come down. Because of dollar index, majority it is always inverted chart of Euro USD. Because of that, Euro USD made new range high, and price action and theory recently same like gold. Gold is trying to break out, so be careful when dollar become bullish. This thing can start turning, but first big support will be 1 and 12 level. You can see USDCHF weekly time frame. Because of weak dollar, price tested recent low but no breakdown. Let's see how they do it. Market turn on Wall Street Journal news leak, which happened almost on each FOMC meeting, nothing new, or Fed FOMC speech. Then this can be double bottom, but more it goes down, will be buying opportunity, and in second attempt it will break out this 83 resistance area. USD JPY, it is sideways because both countries have bond problem. Investors don't know what to buy, US or Japan bond market, but they are replacing everything with gold. Let's see if major shift come from FOMC this week, but it is sideways and new sideways range of 142 area. First upside resistance 148. Bitcoin is still inside a parallel channel, but sideways near previous all-time high, no major change, because ultimately they need to do QE, but they are not doing. Investors are confused. Let's see if Fed explain or not in June FOMC meeting. Last time they skipped the question, but they are maintaining balance sheet size at fixed level. They are buying treasury, but size is not increasing. So until QE start again, there is no reason to buy Bitcoin. And if Fed become hawkish, more information come about QT, then remember there is no support before 75k area. Without Fed starting QE once again, price cannot stay above 100k. SP 500 monthly time frame, big pin war from a trend line when big Trump panic on tariff. Now price fully recovered, almost there. With AVC corrective wave pattern 6100. So let's see what happen next. But be careful. May FOMC they forecast stagflation. June FOMC meeting, there are many reasons to create more stagflation risk. Because of that, Fed can be more hawkish. If Fed become more hawkish, recession risk, price can come down. This is FOMC week, but before official rate decision, many big hedge funds have shared their view, and almost all of them, if you see, they are in one direction. They are saying dump US Treasury bond. Main thing is 10-year bond. Buy gold, buy Bitcoin, and buy stocks. Ray Dalio clearly bullish on gold. Paul Tudor John bullish on gold, Bitcoin and stocks. Double Line Capital, he is bullish on gold. So all of them are saying dump bond, dump US dollar reserve currency system, and buy gold, Bitcoin or stocks. Yield closing, if you see, they jumped on war news. Same pattern repeat again. Dump dollar asset, buy gold, and it is still there near upper part of Fed current interest rate. So until Fed do something, win the trust of investor, to get out of this stagflation crisis. This trend may continue, started in 2022. If you see Grook AI for 70s stagflation, oil price shock and loose monetary policy. September 2024, that was over dovish Fed, like Paul Tudor Jones said last week, loose monetary policy. And right now we have oil shock, everyone waiting for Monday market open. Same to same thing repeating once again. So let's see what Fed say and do in this new FOMC meeting, how he win trust of investor so that he can attract buyers in bond market. But be careful, you can compare with May FOMC meeting when they latest predict stagflation, and September FOMC meeting when everything was super dovish. Either all of them are dovish, yield spike, or all of them are hawkish, firm buying in bond market, yield start collapsing.